Hey guys, what is going on? Welcome into the video. So we had a very nasty inflation report that came in on Friday, coming in at 8.6% year over year versus 8.2%, which was estimated. Now this is an absolute slap to the face of the stock market. Last month, a lot of investors and traders thought that we had seen the first signs of slowing inflation as the year over year number was down for the first time since September of 2021 and looked like we had peaked on that chart. But now after Friday's number came in, inflation just hit a new year over year high and is now the highest since the 1980s. And this also came out to be 1% month over month inflation. And now if you take that 1% month over month number and extract that over a year, you are now stuck with 12% yearly inflation, which is an absolute terrible place to be in. So now let's talk about what is next for the stock market, what I'm watching for this week, and what trade opportunities that I'm watching for. Taking a look at the SPY, the RSI indicator, which is the relative strength index on the 4-hour chart, is the lowest that it's been for all of 2022, which is saying a lot in this market. Now this indicates extreme oversold conditions. This will likely set up the market for an early weak relief bounce before the next move is made. So for anybody who wants to make a bet on the market making a new low in the short term, it would probably be smart to wait for that relief bounce before getting in. The resistance I'm watching for overhead is 397.5 to 398. That is the biggest level that I'm personally watching, and if it can reject from there, that would be a place that I would personally have interest in getting in some puts or short positions. We have another big catalyst this week as well, which is the FOMC meeting, which is taking place on June 14th to June 15th, Tuesday to Wednesday. And Wednesday is the big day when the results come out of what the Fed committee decided, and also Jay Powell's press conference. Whatever happens at this meeting will be a market-moving catalyst. Now, the big decision that everyone expects is that the Fed will decide to raise rates by 50 basis points once again. One thing to note though is after the inflation reading on Friday, the market is now pricing in a new probability of 23.2% that the Fed will raise by 75 basis points and a 76.8% chance that the Fed will raise by 50 basis points. Now, in my opinion, based on everything that Powell has said and telegraphed, it's close to a sure thing that decision will be a 50 basis point raise, but this definitely adds some shock potential to the rate decision. After that inflation came in on Friday, the question is now, did that change the Fed's thoughts? Are they going to be more aggressive? We will find out this week. Now, if there was a 75 basis point raise, that could easily send the market to new lows for the year, in my personal opinion. On the other hand, though, if the market starts pricing in the chance for a 75-point raise before the meeting happens, so early in the week, pricing it in further, and the Fed ends up deciding on the 50-point raise, that could end up being a bullish catalyst for the market, so that is something to pay attention to. Like I said, I think that it's very likely that the Fed will decide on the 50-point raise just because they hate shocking the market. They like to go what the market is expecting and what they kind of have already telegraphed. All of their interviews, they have kind of alluded to the 50-point raise and nothing more than that. So that's my personal thoughts and opinions on the upcoming FOMC meeting. Now, another thing that's super worrying to the market, and I think all investors and traders should be anticipating and paying attention to big time right now, is Q2 earnings season, which is going to get started in mid-July and go on for about a month and a half from there. Now, I'm sure all you guys remember there was a ton of trouble in Q1 earnings reports this year. Just a few examples. That is when we saw the Amazon miss and take that massive hit in stock price. Netflix as well, of course, which dropped over 35% on earnings. Unity, which dropped close to 40%, and Upstart, which dropped close to 60% the day after earnings, and countless others. Earnings season is a massive risk to the stock market, in my opinion. Over summer, in Q1, we saw a lot of disappointing and big misses on their earnings reports, and that was Q1, which are results from January through March. Now, the Q2 earnings are going to be April through June. The macro environment has only gotten worse in that time period. And so a question that we have to ask ourselves, if Q1 earnings for most companies were very bad, what is Q2 going to hold? And that's why I think we'll see a lot of nervousness and panic selling into those reports. And that is something to pay attention to for traders and hedging, whatever you're looking to do, protect yourself from an earnings anticipation sell-off or a post-earnings sell-off. We've already gotten warning from companies like Snapchat, which stated only 1 month after their Q1 earnings that their Q2 numbers are going to be below expectations that they set for themselves less than a month before. Now, this is a potential indication that ad spend may be weak this quarter. Maybe it's just a Snapchat thing, but it does sound like it is more broad than that, and this will affect large companies such as Facebook/Meta and Google, which are massive market-moving companies themselves. And also, Microsoft recently gave a warning and updated their guidance lower, blaming it on Forex issues. Now, maybe Forex was the excuse and the real reason is from the weaker macro environment, or maybe Forex was the real reason for this warning, but either way, it's very worrying for the market. If Microsoft is affected by foreign exchange, then countless others will be affected as well, which can result in missing numbers and, of course, tanking stock prices. Anytime that the second largest company in the US gives an update like this, it should be taken as a big deal for the market and affecting other companies. In anticipation for this earnings season, I personally think there's a good chance that there's a lot of panic selling leading into these earnings reports. Nobody wants to get stuck holding an upstart, for example, through earnings and lose 60% in a single day. There's going to be a lot of nervousness going into this earnings season, and all traders and investors should anticipate this and definitely take note, maybe take action if you're looking to do so. One trading idea is to look for companies that you think are most negatively affected in the current macro environment. Buy puts on those a few months out leading into their earnings reports to get that potential panic selling move leading to earnings and end up taking profits right before earnings. The goal with trades like this is to get that pre-earnings move, but take profits before earnings and not gamble by holding through. One thing is you'll get IV crushed. If you hold contracts through earnings, the implied volatility goes down, so the contract value goes down as well. And leading into these earnings, implied volatility is going up on the contracts. So a chart like this shows it well. Even if the stock is staying stagnant, the implied volatility chart will be going up in anticipation for earnings, which does make a chart more valuable. And if you can pick the right direction for a stock, such as buying puts leading into a stock that you think will get panic sold leading into those earnings, you can make some big gains on a pretty easy trade, betting on people's psychological tendencies as we get close to earnings season and earnings reports. So that's one trading opportunity that I'll be paying close attention to in the next week and next few weeks as we get close to Q2 earnings season. So that's it for the video, guys. Hope you enjoyed. If so, make sure the like button and subscribe button helps me out a ton, and I would greatly appreciate that. For anybody interested in joining the private Discord chat, that is the first link down in the description. And thanks so much for watching, guys. Give me your thoughts in the comments down below, and I will catch you all next time. Be safe for this market. Peace out.